Hello, welcome to Hedera Forum. We're glad you could join us for this, our fourth episode. My name is Jesse Damrow. I'll be your host. If you'd like to connect with us, you can reach us on Twitter at Hedera Forum. You can email me at hederaforum@protonmail, or you can find me on Telegram at Jesse Damrow. We have a great program for you this week. I am joined, as always, once again, by Brandon with themonetaryreset.com. Hello, Brandon.
Hello. Thanks for having me back.
Glad you could be here. It wouldn't really be a show without you. So thank you for everything you do. I should mention, Brandon does a lot, aside from just contributing the amazing content that he does every week in the research and all of those sorts of things. He also edits and uploads these videos to his channel, themonetaryreset.com on YouTube. And none of this would be possible if it wasn't for that. So thanks, man, for doing all that.
Well, thank you for putting it together. I appreciate it.
We also have another guest who will be doing a portion of the program, and we'll call it part 2. Stick around for that. You won't want to miss it. Kyle Baron, the managing partner for BCW Group out of Hong Kong, will be joining us for part 2 of this episode 4. So stick around for that. But before that, let's jump into something fun that we've seen coming through on Dragonglass, which is that if you noticed our intro slide, we were having some fun with Pac-Man because these pie charts are just so fun to look at. And we noticed this trend. You can see here a year out, and I'm sorry, it doesn't say here, but the blue on these pie charts are cryptocurrency transactions, and the green are consensus service transactions. So you can see what this chart looks like as we move through time on a yearly scale up to an hourly scale. And yes, I realize every hour is different. This just happens to be an hour I grabbed when I was on Dragonglass looking at it. But clearly we see the progression for the consensus service starting to take over. What do you think about this, Brandon?
Yeah, so Lehman mentioned this in one of his recent talks, that he thinks that over time, where we had a lot more cryptocurrency transactions before, that would shift, and most of the transactions being put on the network would be done by the consensus service. And not long after he made that little speech, one of our largest contributors to the transaction throughput, AdsDAX, swapped over. They were using kind of a makeshift consensus service. They were using the cryptocurrency service in the memo field to act as if it was a consensus service. Well, they swapped over their transactions to the actual consensus service. So we've seen a huge increase in the amount of consensus service transactions that are being put on the network. But this trend is going to continue. Almost all of the enterprises that are building on Hedera are planning on using the consensus service. So I think the cryptocurrency sliver is going to get pretty small. I think that there are going to be uses for the cryptocurrency service, but I think that's going to be more on the small developer side that are going to use that as opposed to the Hedera consensus service. So interesting to watch and fun to watch.
Yeah, and I put on that intro slide the image of Pac-Man sort of eating up the little ghosts. I see the ghosts sort of as the trust layer, and I see consensus service not only for the applications that are being built on Hedera, but all of the other platforms to come, and even ones that have been under development. If at some point they sort of wake up and realize, hey, this is pretty efficient. If we need high throughput and low latency, why don't we just integrate this and start from there, as opposed to trying to reinvent this? Because as Lehman says, I mean, this is about as good as we know that we can do. So I'm looking forward to other projects adopting the consensus service, and probably not making a headline out of it, but just sort of integrating it on the back end, maybe not even publicizing it. I could very much see that happening. What do you think about that possibility, Brandon?
Oh, I think there's no question. I think when the team first got a hold of this consensus service and put it out there last summer, I think they knew they had something big. But don't think that they thought they were going to have 100% of enterprises planning on using this as opposed to some of their other services. So just looking forward to it.
Yeah. Well, I hope you guys enjoy this slide. I had fun making this, some Pac-Man graphics here that brought me back. So, all right, let's move into the first community question. We've got a few. Isn't EOS just used for porn and betting apps, Brandon?
So one of the things that has come up, because EOS is the #1 platform as far as throughput, as far as transaction volume. And one of the things that has come up several times, this has been paraphrased, of course, but we've gotten several questions wondering about what their throughput is. And normally porn and betting is often brought up. So if you go to the next slide.
Do you say EOS or EOS? Is there a...
I don't know. I say EOS.
Yeah, I say EOS too. I've heard it both ways, but all right.
There we go. So this was a paper, an academic paper that was put together, and one of the other aspects is it was University College of London has some input here. We have 2 of the 3 writers of the paper were from the University College of London. So, and it's doing exactly what we want to do going forward. It's looking into the transaction volume and seeing the value that's being brought to the different networks because of it. And this paper focused on 3, EOS, Tezos, and XRP. So next slide. All right, so one of the interesting things that I saw with EOS was back on November 1st of 2019, so just a little while back, the transaction volume spiked, and it was mainly due to token transactions, tokens that are built on top of the platform. And in particular, there was a token that was built on top of EOS called EIDOS. And it increased the transaction volume from just a couple 100,000 transactions per day to over 1 million in a very short period of time. And still today, the majority of the transactions that are being put on the EOS network, 95%, are from this EIDOS token that were put out. Next slide. Okay, and it's kind of hard to figure out what this EIDOS token does. It sends out a transaction, it kind of boomerangs, and you send some EOS to them. They give you some EIDOS token in return, and it's just a boomerang. And it just, they couldn't really figure out what the purpose of this was. So they contacted the entity that was putting out this token, and they didn't really get a good answer. And actually, they were kind of hostile toward them when they asked what their use case was. So they couldn't really come to a conclusion as to why these transactions were put on. They don't know if it's a DOS attack. It did clog the network. It caused problems as far as what EOS could handle, but they're not really sure if it's that or if it's some other use case that they're planning on doing in the future. I'm kind of thinking it's the prior. I think it's either just there to put more transactions on the network to maybe increase EOS's transaction volume, or if it's some kind of attack or something along those lines, but it doesn't look like it has much value. EIDOS token doesn't have any value as far as on exchanges or anything like that. Okay, so one of the major selling points of EOS is there is no transaction fee, and the EIDOS token makes it clear that not having any transaction fee can be an issue, because it can do things exactly like that. They can clog up the network. If we'll say right now that token is putting 3 million transactions per day on the network, that would cost about $300 on Hedera currently. So it's not a huge deterrent, but it is a deterrent for somebody who is going to do that for a year. That's going to add up pretty quickly. And if you don't have very much resources, you're not going to be able to do that for very long if you're not actually adding value. So
Right.
prior to that token launching, the most transactions that were being put on the EOS network was by a decentralized exchange called WhaleX, and they claim to be the largest decentralized exchange built on that platform. And certainly there's value, of course, for exchanging tokens on decentralized exchanges. But we know, and not just decentralized exchanges, but all exchanges have a cloud hanging over their head. Sometimes those exchanges do wash trading, and that's just to increase the amount of volume it looks like there is on those exchanges. And a significant amount of the transactions that were being added to the EOS network were through this wash trading. So I thought that was interesting as well.
Yeah. So it sounds like kind of best case scenario, this EIDOS token is at least proving out some scalability, and that EOS is still on the top of the list as far as transaction volume goes.
Sure.
But on the other hand, who are they working with, and what is it being used for? Whereas for Hedera, you've obviously got all the council members. We know about AdStacks. We know about the other projects who are actively building on and using it already. So,
I mean, just digging through this paper was good because we know we're going to put a lot of weight into the transactions that are going into the Hedera network. We're going to be paying a very close attention to what's actually being put on the network. I did talk to the team. All of the transactions that are being put on the Hedera network are from applications that bring real value. There's from what they've seen, there's no spoofing of transactions.
Yeah. That's interesting. You mentioned that University College of London. We'll talk about that in a few minutes here, but it's interesting the reception that they were met with when trying to do their research on this. You would think that would be a welcome opportunity to talk about what you're doing,
Yeah, highlight what we're doing. I mean, we certainly do that, right, with what ASDAX is doing, what ACOR is doing, what Teleconsensus is doing. We certainly want to highlight those things. So I don't see why you'd want to run away from it.
Yeah, interesting.
And unless it's being spoofed, of course.
Yeah.
Okay, so moving on to Tezos. Tezos says it has the ability to handle high throughput, but it's actually not doing that high transaction volume right now. I think it's in the 6,000 to 8,000 transactions per day. But one of the interesting things that I brought out of the paper was that 82% of those transactions are just to maintain consensus. It's the method in which they maintain consensus. And it's certainly important for the platform, but as far as external enterprises, it doesn't show any added value. So I thought that was interesting. The other point I pulled out about Tezos was they have an interesting way of going about governance. It's supposed to be very decentralized because everybody on the network gets to vote if they want on what the proposals that are put out. Anybody can put a proposal out for changes they want made to the network. But actually in practice, the only entity that has put out any proposals is this Cryptium Labs. And Cryptium Labs is the entity supported by the Tezos Foundation. So essentially it's their core development team. So that's the only entity that's put out any proposals. And of the proposals they've put out, almost every single one has had a 90%, over a 99% approval rating. So it's been pretty much across the board that it's been approved. There was one thing that I think was a mistake, and that had almost zero approval from the blockchain itself. But I thought this was interesting because even though in theory it would imply decentralization, in actual practice, there is only one entity that's determining what the governance of the Tezos platform is, as opposed to right out of the box, Hedera has the council that's distributed across industry, distributed across geography, and distributed across time. So there's a big difference between what they want to accomplish in theory and what actually happens in real life.
Yeah, that makes sense. I mean, it sounds good, and I do appreciate the sort of utopian nature of that type of system, but in practice, yeah, how are you going to incentivize everybody to take their time to review these things, which I'm sure, it's probably not a paragraph. I mean, it's probably a complicated paper or something that's being proposed are you going to dedicate a whole day to reviewing and voting on this thing?
Sure.
People don't have time, I mean, only the parties that are interested and have most likely an economic future interest would be able to spend the time on something like that. So yeah, in practice, maybe not the best thing now. So yeah, the governing council for Hedera, looking good.
So the last one was XRP, and there wasn't as much juicy information, I thought. I think the writers of the paper thought they had juicy information, but I didn't so much. And the main point that they came out with was just over 2% of the transactional throughput for XRP had any economic value. So there was actual tokens being swapped back and forth between different entities. Now, the reason why I didn't put too much credence into that is because there's two types of value. There's the actual monetary value of tokens changing hands, and then there's the value of the data or the information that's being communicated back and forth. And of course, Hedera focuses on the second part of that, and that brings tremendous value to the network. But XRP is a little bit different, right? They are their main driver, the main use case for them is as a payments rail. So the economic transfers have a bigger weight. But I just wanted to use this to kind of highlight, that their main use case really isn't coming to fruition, and that's transferring actual value in the form of tokens. But that is different from, again, what Hedera is trying to do. Hedera is focusing on the data transfer and the value that brings, and that brings value directly to HBAR token holders in the form of that 1/100th of a penny per transaction going to the token holders via stake.
Right. I wonder, sorry to put you on the spot here, Brandon, but I'm just thinking, playing devil's advocate, if somebody were to approach Hedera with this type of sort of analytical intrigue, what do you think these other projects might say about Hedera, or might pull from a paper like this and point to and say, hey, well, this is something we do well, but look at Hedera. They're struggling in this regard. Is there anything you can think of that you could call to attention?
Well, I certainly, over the past, since AdsDAX has swapped over to mainly using the consensus service, the transaction volume has been very consistent at about 18,000 transactions per hour, or about 5.25 transactions per second. And that was a red flag to me. I was like, well, that seems like it would just be one thing that was adding it over and over. But I contacted the team, and they said they listed the different entities that were putting those transactions on the network, and they just said that it's very consistent throughout most of the day, except for the big AdsDAX dump that comes each evening U.S. time, and they dump hundreds of thousands of transactions over just a few hours. But yeah, I think that's the big difference is Hedera would be very open and want to talk about the platforms that are actually building on them. And I do think there's going to be, as time goes on, there's going to be more variation as far as when the transactions hit, as more use cases actually get put on the network.
I agree. Good answer. Sorry to put you on the spot for that one.
No, that's fine. That's fine. No, the real reason I wanted to dig into this transaction volume of the other top tokens is because we're putting so much weight into analyzing the amount of transactions that are being put on the Hedera network. And I'm going to critique them and ask those kind of questions. So I want to critique the other networks and see how much value is being added through their high throughput.
You want to go back and take a look at Dragonglass quick?
Absolutely. There's been some interesting stuff going on Dragonglass.
All right, so here's the main net. Here's the daily volume. Let me know what you'd like to see, Brandon. I'll pull it up here.
No, so this is fine. Right off the bat, you see that big AdsDAX dump of transactions onto the Hashgraph consensus service. We're seeing hundreds of thousands of transactions per hour, peaking out at over 320,000 transactions in that 1 hour at 9 o'clock. But you see the rest of the day is very consistent around 18,000 transactions per hour.
Yeah.
So I had some questions around that, and we'll keep pressing them on it and trying to figure out what's going on the network. The other interesting action has been happening on testnet. And testnet, I think the prior max throughput has been about 39 million transactions in one day. And we expect that transaction volume to eventually come over to mainnet. Somebody's testing it. They're testing it for a reason. But as you can see, we broke that record of 39 million transactions in one day just yesterday, and it maxed out at about 57 million transactions. Now, if that kind of volume comes over to the mainnet, we will be the most used network by an order of magnitude. So EOS right now is in the top spot with 3 to 4 million transactions per day. If we obviously got to 30 or 40 million transactions per day, we would be higher than EOS by an order of magnitude. And I expect that to happen.
Yeah, look at this right here, May 12th. 60 million transactions.
Yep.
Wow. Great to see. All right.
No question.
Okay, let's talk about this one.
This is another one. So I saw this chart in a little bit different form, and I thought it was interesting. I've seen it just in my general research. And what it is for these different dates, who was in the top 10 spots as far as cryptocurrency by market cap. I think it's important just to show how much turnover there is in these top tokens. Now, there may have been more than 37 tokens that have filled these spots over the past 8 years, but for these specific dates, there's been 37 different tokens. I gave you a little bit of a range there on the upper right that shows where the tokens are today as far as market cap. And many of those early tokens are not in the top 100 and not even in the top 1,000. So if they're in that white, they're not in the top 100. If they're in the dark red, they're not even in the top 1,000. And after
of 13, that's not even. Wow.
Yeah. You don't even see any of those except for Litecoin and Bitcoin around anymore. But after I started to go back and look at what some of the market caps of these platforms were, I noticed that some of them don't even exist anymore. So I had to come up with another range. So any of the ones with the dark red and then the black circle around it, that indicates a token that no longer exists at all. So that was interesting. One of the other things I thought was interesting is, so from crypto market peak to crypto market peak, that's when, as investors, we're going to be most interested, because that should be when we're planning on exiting, is around those crypto market peaks. So the last one was in 2017, 2018, and the one prior to that was 2013, 2014. So between those two, 70% of the tokens in the top 10 were different. So we only had 3 that remained in the top 10. Now, there's a lot less turnover in those top few coins. Of course, Bitcoin is always in the number one. It did get threatened a bit in that 2017 bull run by Ethereum.
Flippening, right?
Yeah, the flippening.
Never quite happened.
I think that there is going to be a little bit more of a shakeup going into the next bull run. I do think we're going to have another bull run. I think we're going to have another peak, and the total market cap of this space will probably exceed the peak that we saw in 2017, 2018. And I think, just like before, I think 70% of the tokens that were at the top in the last one will not be in the top in the next one. And I think that there will be a token that, again, threatens Bitcoin in that top spot. I'm hoping that it's Hedera. I think it has everything it needs in place to do so, but time will tell.
Yeah, great to look at this. It kind of brings me back even before I was interested in this stuff, really. Yeah, this is interesting to see. I don't see any reason why this would change, but like Bitcoin SV, is that really going to be top 10 in a few years, or is that going to be one of your red ones with a black line around it? I wonder.
Well, that's the thing. We really don't know what's going to happen there. But if we go through, Bitcoin and Ethereum, they have some interesting use cases. XRP, we get down to Tether, which is in the number 4 spot, and we have a token that is really just supposed to be the U.S. dollar. And it has questionable collateral, right? Bitcoin Cash, Bitcoin Cash, Bitcoin SV, Litecoin. They're all really just Bitcoin clones with just little tweaks. Binance Coin is just a loyalty program,
Right.
and then we have EOS and Tezos. So
We talked about.
it should be interesting to what happens over the next couple of years. We don't know where that peak's going to be. If we continue to follow that 4-year cycle, we'd expect 2021 to be the bull run and the peak there in early 2018. But I also think there's a possibility that those cycles widen out a bit, so we could be looking a bit further out. But we'll see.
Great graph there. All right. So at this point, Brandon, why don't we give me a second to reload this here. You want to see this on the monthly with the BTC overlay?
Yeah, I do like to look at the past month. There you go. So as I mentioned last time, the end of March, beginning of and most of April, we were kind of stuck in a trading range of between 3 cents and 3.3 or 3.4 cents, and then we broke out, and then we pulled back to around 4 cents, and it looked like we had pretty good support around the 3.8 cent level, and then Bitcoin dropped by about 10% in a pretty significant pullback, and Hedera matched that and fell into a new range, mainly staying in the found new support above the prior trading range I mentioned. So it found support in the 3.4 cent range, and has been bouncing up and down, and resistance started to form around that 3.6 cent range. We just had some positive catalysts that we're going to talk about here in a little bit, and it looks like that has allowed us to break out a little bit above that range. So right now we're at 3.7 cents. One of the other things that I thought was important to bring up here, last week we talked about the correlation between Bitcoin and HBAR, and the fact that it was lower compared to other cryptocurrencies. The correlation between HBAR and Bitcoin was lower than Ethereum and XRP. And I think if there's no other catalysts, the same things that affect the HBAR price will affect anything that affects the Bitcoin price will affect the HBAR price. So, with consensus or with the halving, we have some additional focus around cryptocurrency. So they're going to move similarly. And that's exactly what we kind of saw here. But what my thesis is we're going to have several catalysts over the next year that allow HBAR to break away from Bitcoin. And, those are going to be council member use cases, enterprise use cases, fiat on-ramps coming online, things like that. And I think we're seeing a little bit of that today. So it should be interesting going forward.
Yeah, I couldn't agree more. And we're going to talk about a few of those things you just mentioned here coming up. Yeah, you can see this drop here pretty much in concert. Mm-hmm. But yeah, I think it makes all the sense in the world that the people who are holding HBAR, I wonder what percentage of people holding HBAR also hold BTC. Probably a pretty high percentage, I'm guessing. If for no other reason, then it's probably the most popular way to. Well, I guess you could use USD. That's probably another interesting thing to look at. How many people are using dollars and how many people are using BTC to acquire their HBAR. But yeah, you've got to move in and out of it as you see fit. So it makes sense that there's a high correlation to some degree. But then when we get these differentiators, like we'll see here in a minute, a new council member has nothing to do with Bitcoin at all, or a new on-ramp or anything like that. So we know that a lot of this news is forthcoming. The team has said as much. To your point before, it's all substance. Everything that they've discussed has come to fruition. The only thing I would call into question ever would just be the timeline, which is understandable. I mean, it's a very young project still. We've only had open access for, 9 months or something? Is that right? So to have all this happening in a very short time frame is pretty incredible. So anything else here before we move on up to the price?
No, I think we're good.
All right. So here is one of those announcements we were just talking about. And actually, I had to stop recording earlier to go and make the slide because we're recording this on a Thursday morning here. And this was just announced that Binance US will be providing support for HBAR, which I think is great. What do you think, Brandon?
I think you couldn't ask for better. We've been wanting more fiat on-ramps, and we're going to be interviewing somebody from MoonPay here in a little bit. And that's going to be a fiat on-ramp, but Binance US is going to be a regulated exchange. I believe they're going to be a regulated exchange. They've kind of broken away from well, not broken away, but they are a subsidiary of Binance itself, but they wanted to be regulatory compliant. And it's another way that US buyers are going to be able to get HBAR. And they don't have a really long list of tokens that they offer. So I think this is the catalyst that caused that most recent jump. This morning, Bitcoin kind of broke out last night and went up, about 5%, and HBAR did not follow. So this morning, HBAR, this news came out, and we saw a similar size jump. So HBAR was not moving with Bitcoin until this came out, but I don't think it has anything to do with the Bitcoin move. It's all about Binance US listing. So I'm excited about this. There's no question.
Yeah, me too. I think it's good to sort of diversify where you're buying and holding this stuff too. Right now in the US, I think most people are probably using Bittrex, which I've had great experience with. Mm-hmm. But I think it's good if you can spread it around a little bit. Who knows what happens with some of these exchanges? If you want to have additional safety, there is safety in diversifying where you're buying and holding and sending and storing your HBAR. So just to have another platform like this, regulated platform here in the US, I think is wonderful.
Sure, and this is the kind of things that Bitcoin and Ethereum and XRP, they don't have this kind of stuff to look forward to because they're already listed on all these exchanges. So every bump that we get from these announcements, they don't have that to look forward to.
Exactly, and we've talked about that. Not only the announcements, but what comes after the announcements. It's products, mm-hmm. right? And so what happens when we have all these council members being announced? What happens towards the end of the year, next year, or whenever it happens that, here's a product that one of the council members is launching and working with. So I just see so many potential catalysts in the future.
No question.
All right, a little bit more news. We touched on this briefly because, again, this happened as we were getting ready to record episode 3 last week. University College of London becomes the first higher education council member. The team has alluded that there would be higher education members on the council as well as NGOs. So now that we know UCL has joined, what do you think about this announcement, Brandon?
So, and I've been thinking about this over the past week and digging through the announcements that are associated with them and distributed ledger technology. And there are some, if they wanted to, diversify across geography and get a council member from the UK and also get a university, there are some more household names that you think of, Oxford or Cambridge or something along those lines. But when you actually look at how much work is being done in the DLT space, hands down, University College of London is the top. So if you want somebody who has the most expertise in DLTs, you'd want University of College of London. And completely random, looking for transaction volume information, and 2/3 of the paper was can be attributed to University of College of London alums or students.
Yeah, it says right here. This is the announcement on the Hedera website. I'll highlight this section right here. UCL is amongst the top performing universities in the world. UCL launched the Center for Blockchain Technologies in 2016. So nothing new to them.
Yeah. And like I mentioned last week, they're collaborating a lot with the European Commission. on some of the projects they're doing with DLC. So that's exciting as well.
See that right here. That's in the second paragraph. So that's good to see.
There you go.
I also noticed that if you look at UCL, it's a big university, but the majority is post-grad, and they're highly focused on research. So, yeah, I think it's a great addition. And I'm curious to see who's going to join. We talk about, is it no more than 3 in the same industry that will sit on the council at any time? Is that right, Brandon?
Well, I know there's supposed to be 18 industries, so but I'm not sure what limitations they put on that. That's a good question to ask, though.
I think I've heard up to 18 industries, but no more than 3 in any specific industry at the same time.
Okay, that makes sense.
Certainly there could be at least 2. So if UCL is announced, I wouldn't be surprised if an American university, just because we're also diversifying across geography, it wouldn't have to be American, but Hedera being here in Dallas, I think, and with Mance and Lehman's ties to several universities here, where they not only taught as professors, but have had speaking engagements. And so we know they have open lines of communication there. Wouldn't surprise me at all to see another higher education council member announced here. All right, we got this community question, and thank you, Mark, for submitting this. Why can't HBARs exceed 50 billion? What is it about the code that makes it impossible to create a 50 billion and 1 HBAR? If the Hedera Foundation were strong-armed by a government to create more than 50 billion HBARs, could they? Is it something about the immutable timestamp at time of creation nature of the Genesis block that the 50 billion stemming from it are immutably authentic and uncounterfeitable, and are therefore incapable of being manipulated to exceed 50 billion and thus ruin its scarcity? Thanks for your efforts, and much appreciated, Mark. Thank you, Mark, for submitting it. I'm glad you're watching, and thank you for submitting. Brandon, I sent this to you just before we recorded, and you actually have a good answer. What do you think about this?
Yeah, no, it's a great question, and it's something as an investor you really want to be concerned about. Now, just to go back to like Bitcoin, it has a governance model, right? It's done through the miners and the nodes and the core dev team. Now, they could increase their coins in circulation above 21 million if they got all the miners on board and everybody agreed to do it. Now, of course, that would be very damaging. So to do that would probably not be in anybody's best interest. But we'll say there are very strong controls to prevent this from happening with Hedera. And the main one is around their governance model. So if the council members thought it was a really good idea for whatever reason to increase the supply or decrease the supply of HBARs, they do have the ability to do that, but different things that the council might vote on have different thresholds, right? Some things might just need a simple majority. Some things might need a super majority. But things that are very integral to Hedera and its trust need a unanimous vote. All of the members on the council, either all the members that are currently serving or all 39 members, would have to unanimously agree to change the amount of tokens that will ever be distributed. So that 50 billion is a pretty hard number. But what goes on top of that is a guarantee from Swirls, the only permanent member, that they will never allow the amount of tokens to be increased. So that number is a hard number. That's right.
And also, Mark, just to clarify, I mean, if you look at the distribution schedule, which I should have brought up here, but we don't have to worry about this for quite some time. I mean, the 50 billion, you know, for them to need more, if they need more, that means that everyone on the planet is using this, and hey, maybe that's not such a bad thing. But I think there's plenty to go around for years and years. Jesse Whiteside mentioned on the first episode that Mance and Lehman have discussed Hedera on sort of the 100-year time scale. And the 50 billion supply, I think, sort of reflects that. There's a lot of room roll that out. And I think if there was an issue about, he mentioned a government sort of strong-arming them into creating more, I think it's probably unlikely that if there was a digital currency, a governmental-based digital currency that was utilizing Hedera, it would probably be such that they were leveraging the consensus network, but probably operating on their own private network. So does that make sense, Brandon? I think that would be an unlikely scenario there. I mean, it wouldn't be like a government would say, hey, we're going to build our currency on Hedera's public network. Well, they'd probably stand up a private network and connect it to the consensus service, if anything, right?
Yeah, exactly. And I mean, this is exactly why we have distributed across geography, right? Because it's distributed across jurisdictions. The council members are in different jurisdictions. So one government applying pressure shouldn't be able to influence the governance. And that's the whole point, right? So to condense the answer a little bit, we won't change from the 50 billion total HBAR, mainly because it would take a unanimous vote of the council, and because Swirls has given us the guarantee that they're a permanent no on changing the total supply.
Right. And again, if this happens, it's going to be far into the future. And if that were to happen, it would actually mean that the network was under stress from high usage, which probably wouldn't be a bad thing. So, but
they're divisible to such a small amount that it really doesn't matter.
Thanks again, Mark, for that question. A little bit of news this week. I think we'd be remiss if we didn't mention it because we're recording this on, what is this, May 12th, Thursday? So just this week, I think it was yesterday, we had the Bitcoin halving. And as we're recording this, I believe Mance is speaking at Consensus, or virtually from however they're doing that this year. Let's talk about the Bitcoin halving a little bit first, Brandon. What do you think about the Bitcoin halving happening yesterday, and will that affect HBAR in any way moving forward?
Well, I think both of these things, both the halving and Consensus, which is a large event, both bring focus to the cryptocurrency space, so we get a bit of a bump as far as market attention from both of them. One thing that was interesting, I actually watched Mance talk right before we started recording. He did a great job. He was on a panel, but he got about 15 minutes to run through what Hedera's go-to-market strategy was. We did get some new information. We knew right now there are 13 council members that we know of. We knew that there was one additional one signed, so 14 total signed. Well, in his speech, he let us know that there's 16 total signed. So there are 3 additional council members that we don't know their names yet, that should be coming out before too long.
So we speculated on that. They have said that an NGO could be announced soon. I can't remember when I heard that, but I believe that to be directly from the team. So possibly one of the 3 could be an NGO. Aside from that, I have no idea. I couldn't even guess. So
yeah. So yeah, Mance has mentioned that there are NGOs that are interested. I'm hoping, because we saw the webpage, that Hedera webpage up on the World Economic Forum website, that they're one of them, because that would certainly bring an awful lot of attention. You know, I would love to see Mance talk at Davos.
Yeah, wouldn't that be something? I like this is kind of an opportunity to talk about Bitcoin. What a great invention. Proof of work. I think, it's been holding up. I know everything now, including Hedera's moving towards or building on from the scratch, proof of stake models or delegated proof of stake models. But there's something about the proof of work for Bitcoin that is just kind of romantic. I think as we discover better ways to harness and use energy in the future, assuming Bitcoin's still around, I think that could potentially become less of an issue. And it's just a cool invention. And without it, none of this other stuff would really be possible. So I still follow it. I think it's great. But aside from that, like you said, the correlation to HBAR, probably the major moves will still be tracking each other in concert to some degree, but we'll have these differentiators like these announcements, so we can look forward to that. Anything else here, Brandon, before we move on to one last thing?
No, I mean, except for, we do owe a lot to Bitcoin. I appreciate it. I got, of course, my first cryptocurrency bought back in 2015 was Bitcoin. I reluctantly let it go to invest my Bitcoin in HBAR. It was just a little bit too good of an opportunity going back into December and January. So I did completely divest out of Bitcoin, but I could see possibly getting back into it. There's a lot of things that are in favor of a censorship-resistant cryptocurrency, and Bitcoin has that in its favor more than anything else.
Yeah, especially with fiscal policy around the world right now. I think it's going to be more relevant than ever. It's amazing how that works. I mean, this thing was produced at a time around 2008, 2009 when we were dealing with this last financial crisis, and the one that we're seeing now in many ways is just like way larger than that one, but I don't think it's really sunk into people yet. So I do expect that Bitcoin will be gaining a lot of traction here in 2020, 2021, but who knows, speculation.
But like I talked about before, what I've seen in the past is Bitcoin will breathe in that capital, and that's just capital that can be allocated then to altcoins, and Hedera is an altcoin. So we need to root for Bitcoin just as much as anything else.
Hedera is an altcoin? How dare you, Brandon?
Just using the terminology of the space.
We got to come up with something better than that. It's like, what's the opposite of alt? It's like the control shift coin or something. I don't know.
Well, we'll see. Once we start to talk about Hedera flipping with Bitcoin, then we'll consider changing the name.
I like that. Kyle, would you mind sharing with us how BCW Group is integrating HBAR?
Sure, happy to talk to you about that. So just a little bit of background on BCW Group before I jump into that. So I am Kyle, managing partner here at BCW Group. I oversee global partnerships as well as business development. We're a strategy consulting firm that works basically across three main disciplines. So digital payments, digital asset infrastructure, and distributed ledger technology. Our headquarters is based out here in Hong Kong. We also have a small entity in South Korea, and soon we'll be opening up an office in Singapore as well. So we are working with the Hedera community in a bunch of different ways. We've been across the Hedera project since about fall of 2017. That's when I met the executive team on one of their first road trips out to Hong Kong. After that, my team and I dove very deeply into the technology, and we're extremely excited about what Hedera was doing and some of the scalability capabilities of it, and ultimately what that would mean specifically as we work more on the enterprise side of the industry and what Hedera's overall impact would be. Now that Hedera has launched, and we work quite a bit in the digital payment space with companies like WorldPay from FIS, who are on the governance council of Hedera, what we look to do is sort of build the infrastructure around ecosystems such as Hedera. And so as a lot of different wallets are coming live, different applications are coming live, what we've done is we've put a partnership together with one of our payments processors, a company called MoonPay, which is a really great developer-friendly product. And what we have done is taken it basically to the Hedera ecosystem, first by entering a challenge into the Hedera 20 hackathon, which is currently ongoing. We're really excited. We're doing the fiat to HBAR MoonPay challenge. And basically what we're looking at here is, of the 30 plus projects that are currently hacking away, who can create the best application or use case very specific to allowing for the masses to be able to easily purchase HBAR across the network. Separate from that, what we've done is put together sort of an affiliate program, and we're currently speaking with so many of the different entrepreneurs that are building on top of Hedera these days. And what we're offering to them is basically a very simple widget, which allows for customers to use debit cards and credit cards directly to purchase HBARs. So basically, let's remove all the friction points of first-time users who are looking to purchase HBAR or just to use an application that's running on HBAR. So what this will do for customers is it will allow for them not to have to go to an exchange. They'll not have to KYC at the exchange. They'll also not need to wire money from their bank accounts to an exchange, convert into Bitcoin or USDT, and then into HBAR, and then send it off the exchange back to a wallet or an application. That's typically about a 5 to 8 day process going across all those different checkpoints. Basically, what we're empowering is a direct click to buy capability. So a customer might not even need to understand what HBAR is. Ultimately, they're basically able to top up using their credit card directly into any of these applications or wallets.
Wow.
I mean, we've been talking about this for a while, that we need more, particularly US on-ramps, to be able to purchase HBAR. So I do have a quick question. I looked on your website, sure, and it mentioned, or it showed the different assets that you allow. And in the US assets, it didn't include HBAR. Is that something that's going to be integrated or has been and just hasn't been updated?
Yeah, it's a great question. So we're able to offer HBAR all around the world. And for the US market, HBAR will go live in the next week or two. Okay. So we're currently working through that with one of our partners on that side, and that should be live. Separately, when we're talking about MoonPay specifically and their processing power, currently we're able to process in about 60 plus countries and 40 of the 50 states of the United States. Okay. In the next couple of weeks, actually, that will go to all 50 states in the US, and we'll be processing across 146 countries. So basically, it's a global solution, and we'll have HBAR integrated in for all of those markets.
Okay, excellent, great.
So one quick question for you, Kyle. You mentioned that a user, if using their credit card on a certain platform, might not even need to know that they were purchasing HBAR. So is that correct? So they wouldn't even need a wallet or anything. So they're just going to use their credit card. Let's say HBAR is built into the integration of the website or whatever platform they're on. They need to pay an HBAR, but they can do so with their credit card, and this all happens behind the scenes. So I understand that correctly?
Exactly right. So let's say, for example, a particular application that's running on Hedera is able to whitelist a certain amount of wallets that are basically built into that application. What they can do is basically pass those white label addresses to us, so that when the customer uses their debit card or credit card, we can just directly fill those whitelisted wallet addresses for them. And therefore, that's on the back end powering the usage or the utility of whatever that application is asking for from the end user. That is one use case. You know, we'll have other customers that are looking for this more for, let's say, investment or speculative investment reasons, or even just to be able to top up a general wallet. And therefore, they might already have a particular wallet address that they'd like it to be sent to, or we have a workaround so that we can actually populate those addresses on their behalf.
Oh, that's really cool.
Yeah, I mean, that's something we've been talking about for years is, you know, it's important for mass adoption that we get to a point where sometimes the users don't even really know that they're using the cryptocurrency itself.
Absolutely right. You know, the way we see things is basically that the only way for actual utilization of these networks to take off is for the masses to not have to relearn how to use technology. Basically, the user experience needs to be very simple, very seamless, and needs to feel exactly like what they're used to today when they're going to Amazon or purchasing their groceries online. It needs to have that exact look and feel. So currently, there's a lot of friction points in the market of basically moving fiat assets into digital assets. What we try to do is nullify that through some very simple processes that the end customer doesn't really need to know about. They just need to be comfortable that feels, looks, and is trustworthy for them to be able to make those purchases.
Sure, good stuff. So I do have another question. You know, there's actually two entities that you work fairly closely with that we're interested in. One of them is Hedera itself. So what has your journey looked like with Hedera? And then the other is the council member, FIS. So WorldPay is part of FIS. So if you can kind of talk us through your journey with them.
Sure, yeah. So my journey kicks off back in fall of 2017 with Hedera. The executive team was in Hong Kong for some meetings or a conference, can't exactly remember, but met them actually at the, I think, first ever Asian Hedera meetup. It was quite a small affair, got to know a couple of the guys there. It was super interesting. Basically, our team, our consulting side of our business, after that started to do a bit of a deep dive into the white paper, obviously, got quite close with the team. And started to look at opportunities of sort of how we can provide value to them. We were part of the investment rounds as well, so came in pretty early there. as we were quite excited as to the actual base technology. And of course, listening to Dr. Lindenberg's vision as to where Hedera would go is enough for anybody to get pretty excited. From there, we helped with some different open access initiatives. Because we sit in Hong Kong, we also became mentors of the Helix Accelerator. So we worked with the first cohort that came out of that. Some really great projects, such as hashing systems, came from that program. And so we got a little bit closer as well with some of the startups. On the other side of the business, because we do a lot of work with corporate enterprises, we work with WorldPay from FIS. We're an integrated partner of them for a couple of years now. And basically, we work with them on their overall strategy for the digital assets market. We work with them on global partnerships, and we're also their external business development team, as we're quite close to a lot of the businesses in the industry. So we did make the initial introductions from FIS over to Hedera, and we're across that exciting, very long process. But on the other side of that, really excited that FIS joined the governing council, as there's an incredible amount of opportunity there specifically for a global payments processor.
Jesse, do you have any questions?
I probably have about 1 million, but it's an interesting topic. I think that's great. So you guys were essentially responsible for introducing FIS to Hedera. That's incredible.
Well, so I mean, at that point in time, they were both our clients. So obviously, we were looking for synergies that made a lot of sense for both parties. We understood what the objectives are for FIS moving forward, specifically in the space. And honestly, there was no one out there parallel to Hedera, so it seemed like an obvious match for us to get those conversations started.
So another quick question.
Sure.
You mentioned how Lehman lays out his timeline and what his expectations are and how exciting that is. How do you think they're doing from the time he made those initial speeches to you to where we are now? Do you think that they're exceeding your expectations? Are they meeting your expectations? How do you see the journey going so far for Hedera?
So I think the journey is actually going quite well. It's very difficult to scale a network like this, obviously from the security and technological side, but also in terms of creating a critical mass. One of the things that makes Hedera so interesting is they have sort of a top-down and a bottom-up approach at the same time, which is very different than most of the other networks in the industry who focus much more on the startup community. Mm-hmm. The fact that in such a short period of time, Hedera has been able to sell to Fortune 500s and now UCL, a major university out of the UK, what this vision is, what this technology is, and very specific use cases. I think that really shows how much traction they're able to make in the market with very specific use cases. So what I mean by that is when a council member comes on to join Hedera, they don't just do so because they think it's an interesting idea. They're obviously having to take a lot of their internal resources away from other potential projects that they would like to either make investments in or build task forces out, and redirecting that directly to this platform. So in order to do that, what has to happen is very specific use cases have to be designed even before they're going to join the council. And so the fact that Hedera has been able to do so with the likes of Google, FIS, IBM, et cetera, and each one of these use cases is so completely different in scope and nature, to me that shows that Hedera has quite the legs in order to really build something very special here. And definitely with the advent and the deployment of HCS, I think they are far beyond schedule in the metrics that we think are very important, which is much more focused on corporate adoption.
Sure. Yeah, that's something we've talked about in the past, is that it almost seems as if the network thinks that these are paper partnerships, that they kind of like the Ethereum Enterprise Alliance, like they joined, but there wasn't really much teeth to those agreements, where we think that there are use cases, and the use cases are coming sooner rather than later. So no, it's good to hear. Thank you.
Yeah, no, I think that's such a really important point, is that this is really the only network that we've seen where these organizations that join own 3+% of the LLC while they have that seat, which is very, very different in its structural makeup to any of these other partnerships that you see in the DLT space.
Very good. So we mentioned the pain point already of fiat on-ramps, particularly in the United States. Are there any other pain points that you've noticed that you think could be addressed?
Yeah, so one of the other pain points that we're trying to address as well, specifically with this MoonPay product for Hedera, is we're actually adding another service built into this, which will go live probably by the end of this month or early June. And basically, that's the inverse of what we've been talking about. So actually fiat to crypto. So let's say, for example, directly from your wallet, you'd be looking actually to turn HBARs back into a fiat of some sort. Directly into that product set, you'd be able to do so. And on our side, MoonPay side, what we would do is actually send that fiat directly to your bank account that you've KYC'd. So I think that's also a really great opportunity for people to be able to move across different types of asset classes in and out of HBAR. It should be quite helpful.
Okay, so that's
one of the other.
I'm sorry, go ahead.
Yeah, one of the other things that we're really excited about, we think this is probably something to do further down the line, but this is also something that we would need to start to get a good sense from the community how much they'd want a product like this. But my firm, BCW Group, we also represent another technology partner called Turnio. And basically, Turnio is a US-based company. And what they do is they provide white label Visa issuance cards, specifically for cryptocurrency companies. So what we would love to do at some point in time, but again, we would need sort of a critical mass of enthusiasts that would be interested in this, is we can design basically a Visa card that's branded as Hedera Hashgraph. On the back side of that, if you were to have this card, we can create the base currency to be HBAR, which then means you can just upload on an application your HBARs or actually any other cryptocurrency. We have about 13 of them, stable coins as well as major cryptos, which then get converted directly, in this case, because it would be a HBAR focused Visa card, into the base of HBAR. And then what happens is that it is a Visa card. So at 46 million merchants around the world, you can just present the card either online or in person. It's actually a debit card. And from that, you'd be able to, on the backside, convert that HBAR directly into the local currency at the point of sale. So the idea is an initiative also to not just focus on the price of HBAR, but ultimately to give some more utilization to be able to use HBAR in your everyday lives. That's
really impressive. And I mean, it just adds liquidity to the market. So it's really good all around. Right. So another question, you mentioned that if you have a debit card, you're working on the potential of doing those crypto to fiat transactions. And if you have a debit card, of course, that's going to be linked to your bank account. We also talked about how you could possibly purchase HBARs with credit cards. Would it work the same way and then just go on your credit card balance if you were swapping back using that service?
Yeah, so yeah, that's a really good point too. So one of the major use cases that we find on the white label Visa issuance cards is actually off-ramps as well. So you can pop that thing right into an ATM for a very small fee. I think it's about 1% or so. You'd be able to convert whatever your base currency. In this case, if we were to build it for the Hedera community, your HBAR directly into your local fiat, directly out of an ATM. That's correct.
Excellent. Very good.
Yeah.
That is incredible, but I am not spending my HBAR anytime soon. That's just me. I'm just saying, but that's cool that that option will exist, though, for some people who maybe have a lot more HBAR than I do.
Yeah, I agree with you on both of those points.
Good stuff. All right, Jesse, do you have any further questions?
No, I think that was great. Thank you, Kyle. Very informative. Thanks for joining us late. I know it's late in the evening for you. Anything you'd like to say before we drop off here, Kyle?
Again, thank you for the opportunity. It was great to talk shop about Hedera. And for anyone who's out there looking to build on top of Hedera, reach out, say hello. We're happy to hear your ideas, give you some pointers as well. We do have some experience across this network as well as others. And again, happy to help you get integrated so that you can work directly with customers as well.
Great. Thank you so much, Kyle. All right. Well, that will bring us to a close here for episode 4. Thanks, everybody, for watching. Once again, if you'd like to reach us, submit your questions. Find us on Twitter. Let us know how we're doing, how we can improve. Before we move on, I want to say that Brandon and I have a few personal and professional obligations coming up over the next few weeks, so we might take a slight hiatus here. We're not going anywhere. We are very much enjoying producing these episodes for you, but probably going to have a little bit of a layoff here as we move forward. So, Brandon, thanks again. This is always fun. Any parting words here?
No, thank you, Jesse, and everybody take care. Goodbye.
All right, guys. We'll see you next time. Appreciate it. Thanks.